Hey, MCE crew, Joe Biden is attacking generational wealth. That's right. Joe Biden is attacking your ability to pass on wealth to your children and grandchildren. And this is happening in real time with one of his budget proposals. So let's examine how this works. And also, let's look at two mitigation strategies that can insulate you from this all-out attack on your ability to make sure that your family, off into the future, can enjoy life like the Kennedys, okay? And I'm not talking about having your kids sit back all day and do nothing on a yacht. No, I'm saying your kids and grandchildren should have the freedom to explore careers, to think without having monetary survival be first and foremost in their minds. So if you're setting up generational wealth and giving your children and grandchildren the ability to make choices, okay, not led primarily by, oh, I got to make this money, okay. Maybe your child wants to be an artist. Maybe they want to be a scientist or something like that. They should be free to be able to do that if you're building the wealth foundation that will allow them to have those choices. When I was coming up, my mind was on money because I came up very, very poor. I've got PTSD probably from poverty. And so my choices were around making money. But I told you in a previous video, I wanted to be, or I have a great interest in quantum physics. Maybe I would have gone into that field if money was not necessarily as big an object for me as it was coming out of the traumatic circumstances of poverty. And look, don't get me wrong. I grew up in a very loving home, but as I got older, I started to understand how, poverty affected the choices that were made in my family. And I wanted to be insulated from that. So if you're out there trying to do that same thing for your family and build this financial foundation again, like Joe Kennedy did, or like, John D. Rockefeller or Andrew Carnegie did, so many of these people have done and are doing, then you should not have that ideal curtailed by government. So let me give you an example. Let's say that you go out here right now and you purchase a home for $150,000. And over the years, stuff happens in that neighborhood and the value of that property just keeps going up and up and up. And your kids get older, of course, and you pass this house on to them once you pass away. And that house went from being worth $150,000 when you bought it to $1 million because of the development in the area, general appreciation of property, so on and so forth. Who cares? Now it's worth $1 million. They could get $1 million for that property. Well, with Joe Biden's idea, your death would amount to a taxable event. And because you have an asset that is $1 million or greater, now you're going to have that asset taxed upon the transfer to your heirs, your children. So here's the situation your children would find themselves in. They'd have to come out of pocket with $300,000, the 30% of $1 million, in order to accept that property. Now, they don't want to sell it. They want to hang on to the property because it's very valuable. But the government says, we don't care about that. You owe us, because you're the heirs that the property was transferred to, you owe us $300,000, 30% of $1 million, because a taxable event occurred when your parents died. That's all that happened, okay? That's what Joe Biden's proposal amounts to. So you can see how that would be very, word of the day, deleterious to the wealth of your family. First of all, if they don't have the $300,000, then they're put in a situation where they would have to sell the property in order to get the $300,000. Or there's also a possibility that they could come into some kind of payment arrangement with the IRS, but still, that payment arrangement is for $300,000 over the course of who knows how many years, and who knows what interest the IRS would tack onto that. So a far less than ideal situation for building generational wealth. Bloomberg has some things to say about it. They're saying, and I don't necessarily believe this, but they're saying that the chances for this proposal are dimming. But I think Congress has heard a lot of feedback on this issue. People understand that it's not only the millionaires and billionaires that are going to be affected by this. Okay? If you have a child today and over the course of the next 40 years, if you've got an asset that you purchased and continue to contribute to over 40 years, it's a dynamic and very definite possibility that that asset is going to be worth more than the amount that would be triggered by this taxable event, your death. Okay? So you may not have been a billionaire. When they talk about millionaires and billionaires, they're talking about you. You see how this could affect a middle-class family having gone out there and bought the property at one price and then they didn't make any, big-time deals. They didn't found some mega company. No, they just had the house appreciate over time. And now they're subject to the death tax. A lot of farmers get caught in that type of situation because the owner of the farm dies, they try to pass it on to the kids, and it just results in this ridiculous situation. Death and taxes, the only certainties. Well, the United States government has figured out a way to tax death, of all things. So they're saying that this thing is going to, maybe realize some hurdles in order to get passed, and it may not pass at all. Again, I think they're just trying to calm down the heat that they're getting, because people are starting to realize that, oh no, this is not reserved just for millionaires and billionaires. Now, Biden this is from the Bloomberg article, which of course I will attach in the description. Biden had proposed raising the capital gains tax rate for top earners from 39.6% to 20%. Now, on face value, you might say, well, that's only 20%. 20% is a lot, but it's not only 20%. A hike from 20% to 39.6% is actually a 98% increase percentage-wise, okay? So that's tremendous. And, you want to avoid legally as much taxation as you possibly can. So let's talk about ways that you can accomplish that. Look, I'm going to be straight with you. Start examining the people that you're voting for. Now, a lot of people, when they go into the voting booth, they take a lot of emotion in there with them. You saw this politician, he came to your church, he sung a few bars of a Negro spiritual, he kissed a baby, and that is sadly what does it for most people. And he might even mix in some, talking about the other guy's evil, okay? Has not said what he plans on doing for you, has not, really opened himself up to any probing questions, a whole lot of theater, flowery language, and that does it for most people. So if you're voting in such a way where you're not paying attention to the facts and you're not paying attention to the economic ramifications of a politician's group of policy positions, say that 5 times fast, then you have no one but yourself to blame for this politician going to your state capital, the nation's capital, your county council, and doing things that are antithetical to your financial interest. Okay? People always talk about term limits. They should vote themselves term limits. That's never going to happen, simply because are you going to vote yourself out of your job? No. So here's the thing, though. You, as a voter, you already have the power of term limits in your hand. If you've ever been tempted to talk about term limits and how politicians should vote themselves out of office with term limits, first ask yourself this question. How many times have you voted to put the same person back in office? Did you exercise term limits? Because you do have that authority if you want to exercise it. So that's number one. Okay, that's something that is indirect. Okay, but you got to watch who you're voting for. It's all about the money, people. Politicians understand that. And look, I know one group of politicians is constantly out there talking about how much they care about you, and they want to alleviate poverty and things like that. Well, we've been fighting the war on poverty since 1965 with Lyndon Johnson's Great Society program. Have spent trillions on basically subsidizing poverty. And I say subsidizing poverty because now the government, that entity that is government, understands that poverty is a great way to increase taxes, create jobs that you can give out as patronage to supporters, create little programs like, all right, we're going to contribute all this money to this union over here or to this 501c3. And then it's going to magically come back in the form of campaign contributions. So it's a way to take money out of your pocket and put it into the pocket of special interest. So keep all those things in mind when you vote. Number two, you've got to get your money into a situation where it is tax advantaged. And look, there's a vehicle out there that these politicians know very well. In fact, they know it so well that they increased the effectiveness of it back at the end of 2020. These Democrats and Republicans, they don't agree on much, but when it comes to their money, they agree on that. So you didn't even hear about this probably. At the end of 2020, Trump proposed, and the Democrats and Republicans, they passed this bad boy without any fanfare. They attached to one of the stimulus bills a provision that would increase the amount you're able to contribute to a permanent life insurance policy. Now, cash value insurance policy. Why would they have done that? Well, because you get three very important tax benefits when you put money in there. Number one, it grows tax-free. Number two, it allows you to be able to get money out of it tax-free, like a bank. You can borrow it from yourself, and it's not a taxable event. And number three, it allows you to pass on money to your heirs tax-free. They're not changing that. And they all agreed that, hey, this is what should be done. There were contribution limits on it. They increased those limits. Now, why do you think politicians would have done that? They would have done it because that's part of where they're putting their money. Okay? So, as we always say, follow the people who are making the rules and who are making the money. So those are two things you need to really seriously consider. And if you want to talk about the latter, of course, you do what you want to with the voting piece. But if you keep voting the way you've been voting, I'm not saying that politicians have all of the answers either. But there's a group of politicians that wants to raise taxes, and then there's a group that generally resists that. I mean, that's just, be adult about it. It's brass tacks. It's true. But with the latter, if you want to have more information about not only acquiring one of these policies for yourself or for your family, give us a call, mcenow.com. Go on there. We've got all our contact information. Also, make sure that you know that if you want to start a business in the financial services sector, now is a great time to do so. And we could talk to you about that as well. So, okay, I'm going to put up this video right here that's going to talk to you a little bit more about that permanent cash value life insurance policy and give you some more information about it. But that's what's going on. Let's continue to watch what they're doing with this death tax. You'll also hear it referred to as the estate tax. That's the term they use when they want to make it seem like, it's some rich person getting the benefit. But we just showed you how a moderate income person who just sat on an asset and let it appreciate could also be targeted by this. Okay, guys, I'll talk to you soon.